Hello, everybody. Welcome to the first episode of Basics in Economics just for Prelims 2023. What do you mean by GDP? GDP is the final value of all the goods and services produced within the geography of a region. That means it will include the goods and services produced by the nationals and the foreigners within India. GNP is the final value of goods and services produced by all the nationals of a country. That means here we will count the profit made by Tata by selling Jaguar and Land Rover in Europe, but we will not include the profit made by Samsung, which is a South Korean company. We will not include the profit made by Audi, which is a company based out of Germany. And when you add net factor income from abroad, to GDP, you get the GNP. And what is that? Net factor income from abroad. The money earned by Indians abroad, they will send it to India. The money earned by foreigners India, they will send it to their respective countries. Just like how Samsung is sending it to South Korea, Audi is sending it to Germany. GDP minus depreciation and GNP minus depreciation gives you NDP and NNP respectively, where depreciation is nothing but the replacement investment. What do you mean by replacement investment? Any machinery you talk about, any capital good you talk about, any investment you talk about, it will always undergo wear and tear. And whatever road, airport, seaport, building, machinery that undergoes wear and tear, you will have to do what? You will have to replace them. The investment that you make to replace them is called what? Depreciation. One thing you must observe here, net domestic product or net national product does not include depreciation. NNP at factor cost is nothing but the wages plus interest plus profit plus rent earned from the factors of production like laborer, laborers plus the capital plus entrepreneurship plus the land. Wages from laborers, interest from capital, profit from entrepreneurs, and rent from land. Add all of this together, you will get what? National income. And again, if you notice, it is net national product. That means national income does not account for depreciation. Keep that in mind. Factor cost is obviously wages plus interest plus profit plus rent. What do you mean by basic price? The factor cost plus production taxes minus production subsidies means what? Production taxes, say for example, these are one-time taxes that you pay for the land. Production subsidy, government on any day for any investor, whenever they come, IT companies, manufacturing companies, etc., they will give subsidy on the land. Land will be given at a cheaper rate to these big companies so as to encourage investment. Then you have market price. What do you mean by market price? Market price simply means you will add the basic price with the product tax minus product subsidy. That is, this is per unit of the product the tax is charged, like excise duty, GST, etc. Product subsidy means what? For the product that you're launching in the market, you will be getting the subsidy per unit, like how government is giving subsidy for electric vehicles. Now, what is the understanding? This is the basic part here. How important is GDP for a country? Growth in GDP will increase what? Employment opportunities, which will increase income, which takes us to our next topic, that is inflation. That means whenever you have GDP increase, you will always have some amount of inflation. Inflation, again, are of two types, cost push inflation and demand pull inflation. Now, what do you mean by these two entities, cost push inflation and demand pull inflation? For that, you will have to wait for episode 2. Any other suggestions or comments that you have? How did you find the class? Whether it was easy for you, whether this is short enough, you want a longer video, whatever you have, please put it up in the comment section. Have a wonderful day, people. Take care.